To get more this morning, we have Stephen Bird, Citigroup's Asia Pac CEO, joining us live on the program. Good to see you. Good morning to you, Stephen.
Good morning, Susan.
I'm going to first start off with this piece of news. You're still part owned by the U.S. government for now. Yeah. From your dealings in the Asia Pac, what have clients said to you about this? Have there been any concerns?
Well, Asia has been a tremendous contributor, as you highlight, to the company. We've had a terrific year. I think if you look over the last 3 years, Asia has generated $45 billion in revenues, $15 billion in net income. So we've been a major positive factor in helping the company come back to strength. And the fact that this morning the US Treasury has announced they will sell the last remaining shares in the company at a profit. We're very grateful for the support that we received, and we're delighted that the US taxpayer is making a profit as well.
Yeah, and it's a long road back from the financial crisis as well. And some startling figures here in the Asia Pac for Citigroup. I mean, this year you have a record first half profit of $2.5 billion, revenue of over $7 billion, and as I mentioned, the largest contributor region-wise to Citigroup's bottom line. What about for 2010 as a whole? What kind of numbers are you expecting to see?
Well, if you look at, I can give you the third quarter, year-to-date third quarter numbers, $11 billion in revenue for Asia, $3.5 billion in net income. But if you look at, we're beginning to see the benefit of the investments that we've been making. If you look at the revenue and net income in the third quarter compared to the prior year, they're up 17% and 19% respectively. So the trajectory of the business is very good. If you look at the fourth quarter deal-wise, we've been in the market with really the biggest capital markets transactions here in Hong Kong with AIA, Joint Global Coordinator. If you look at GLP, the largest IPO in Singapore history, or Coal India, which is also the largest IPO in Indian history. So we've been there in the most important transactions. The broader picture, we've raised $150 billion for our clients in terms of capital.
Okay, well, let's talk about the IPO picture, because that has been obviously a headline grabber in the Asia Pac, considering the huge amounts raised this year, $22 billion from Ag Bank, in excess of that $18 billion from AIA right here in Hong Kong alone. What about for 2011? What are your projections? Are we going to see some massive listings again?
Well, the pipeline is very strong. I think we'll see a continuation of the broad macro picture of Asian companies expanding, local going global. I think we'll see more of that. I think we'll also see a lot of M&A activity. If you look at the cash positions that companies have, right now it's about 8% of assets is in cash. So they're highly liquid and well-funded. And if you look at QE2 is actually making asset prices, debt cheaper. And asset prices themselves are at historically attractive levels, about 14 PE. So I think you'll see the developing world invest in the developed world. You'll see more of those trends, more of the sort of Geely Volvo type trades, where they're buying brands and distribution in the West.
Okay, well, Stephen, let me ask you about how Citigroup is banking on China, because you said before that you wanted to triple Citigroup's headcount in China over the next 3 years to 12,000. And you're also in the consumer banking business as well. What about credit conditions in China? Some are talking about a credit bubble, asset bubbles, basically on a treadmill to hell. You've heard Jim Chano say that. What are you seeing? What is Citigroup seeing right now in this particular market?
Well, we're very excited about China. For us, this is still the beginning of the China story, I think. I actually was in Changsha in the Hunan province just last week. We are going to be opening there. We opened in Chongqing. We're about to open we opened in Guiyang, which was our 11th city. We're going to open in Nanjing, where we already have our
So you're
approval.
not seeing signs of a credit bubble then in China?
Well, I think we're quite circumspect about the amount of credit that we deploy in the marketplace. The government, we think, is taking prudent and sensible cooling measures. They are more aware of the potential bubbles, particularly in housing, I think, than anyone else. So we think we'll see continued good, responsible actions on behalf of the government in China.
Stephen, let me ask you, because this morning we have Jim O'Neill, the man who coined the term BRIC, speaking out, saying that consumer spending in these BRIC nations is the best investments of our lifetime. Is that the same for Citigroup? Is that what you're finding as well?
Well, that's why we're investing heavily in our consumer platform. I mean, we've opened 11 branches this year. I mentioned the new cities that we're opening in. We will continue to open next year and expanding across. Probably over the next 2 to 3 years, we'll get to 100 branches in China.
Okay, Stephen, I'm running out of time here, but we are heading into the holiday season, and you know what that means for the banking world. It's bonus time, so because of all the billions of dollars I just spelled out for earnings for you, how do bonuses look at Citigroup?
Well, as you know, Citigroup has adopted a lot of the, in fact, adopted all of the recommendations of the responsible banking compensation. So our compensation tends to be of a longer-term nature. It tends to reward employees who have built strong value for clients. So I think that will
they be happy at the end of the year?
I hope they'll be happy.
Okay, Stephen.
I hope to be happy too.
Well, it's nice seeing you. I'm happy to see you this morning. Thank you for dropping by. Stephen Bird, Asia Pacific CEO for Citigroup.